Yeah, Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Glad you're able to make it in for this beautiful Tuesday morning. I want to welcome you all back, everybody that comes and joins us on a regular basis. For those of you that are brand new, do me a favor, click the subscribe button. Don't forget to hit the notification bell so you get the alert so you know that when we go live. Although we typically go live every day at 7 a.m. Central. So if you're watching this on recording, why? Just join us live. So much easier. All right, let's go ahead and get started. Hope you guys are all having a great day. We have a fair amount of things to look at today. Let me shrink that. There we go. Starting with the S&P. Well, hello, Paul from the ATL. I do love the ATL. Got to go visit. Trent, Tom, Louise, good to see y'all. All right, so starting with the ES. Now, yesterday we talked about the potential breakout trade in both the ES and the NQ, and the breakout trade worked out extremely well for both of those markets, hoping that you guys were able to grab some of that and take some of that, allow price to run a little bit. And then we did come near our supply area in the S&P. Now, I'm going to bounce between the S&P and the NASDAQ because we came really close to our supply area in the S&P, and we actually came into the supply area in the NASDAQ. So both areas told us, okay, hey, maybe it's time to take a little bit of profit off of these positions. And so now, where am I looking? Well, I'm still going to continue my bullish bias. There's no reason not to continue our bullish bias. We talked about the fact, and this was a couple of days ago, but we talked about the fact that once price got above here, that essentially it was going to be clean air. And we had clean air once we got above that level, and we've continued to enjoy that clear air, right? It's been smooth sailing all the way up. So now how do I get back in on this thing and take advantage of it? Well, first of all, this 15-minute level that we have here, we have to go back and look at when that 15-minute level was formed up. Let me zoom in on that. That's a fairly clean 15-minute zone formed right there at a market open. I'm going to tighten it up a little bit because sometimes I draw my levels really quickly instead of being super precise. So ultimately what we want on this candle is we're wrapping our lines around the high of the wick of this red candle and the low of the body. So in this one that's 35, the low of the body, so the close. So 35.53 half, and then the high is 35.63 half. So 35.53.5, 35.63.5. This is the actual number. So if you want to get a bit more precise, that would be the most precise drawing of that line. I don't always do that because, frankly, I'm trying to get through these markets pretty quickly. But that's actually a pretty clean 15-minute level. I mean, that's a strong move away. So that level, not dead, still valid, especially when we look at it on a 15-minute time period. Now, on a 1-hour chart, as we come into that level, that could still be a valid level, but it's got to be a confirmation trade. And it has to be a confirmation trade because our big picture trend is still up. And with our big picture trend still being up, that's the only way that I can take that thing. All right, so next, let's look to see if we get a bit of a pullback. Well, if we get a bit of a pullback, originally we had this 15-minute level down here at the origin of this move up. I'm actually going to remove that because our level from yesterday right at the open was significantly better. And I'm going to wrap my lines around the hourly level because the hourly level was truly the origin of that move. Right there. So 34.9813 by 34.91. So 34.98 quarter by 34.91 quarter. So a fairly, 7-point wide level. So there's a little bit of risk there depending on your risk tolerance. But what that encompasses is on the 15-minute chart, this whole area up here. Now, if you want to be the most aggressive, you actually would include this little wick over wick area here on the 15-minute chart. Everybody sees there's a little 15-minute wick over wick area right here. Great minds, Dennis. Love it. little area right here, that little basing or that little wick over wick area there on the 15-minute can be included. And so if you think of it like that, what you really have are two levels. You've got a little 15-minute level right here and a 15-minute level right there at the pivot, right? Both of which I think are pretty clean areas that you can see a reversal. So we just wrapped our lines around both in order to give us that highest probability entry point, okay? Now, if we get too much basing in front of that level, that's going to make it null and void. Remember what basing is: kiss of death before a level. Now, what about a breakout? Well, technically, you do still have the potential for a breakout, especially on a 15-minute chart. I would say that 15-minute level on a breakout would probably be somewhere up above this range. You could theoretically even do a breakout above the Globex high, which would be just above here, if you want to give a breakout try for a day trade. But remember, this is actually really legitimate supply up here, so make sure that you understand that when you would get into that position. Next would be the NASDAQ. So looking here real quick at the NASDAQ, we did have a really nice move yesterday from our breakout trade. Now, this was our second breakout trade of the week. Remember that. We talked about the fact on Sunday night about getting long above here on a breakout, which a lot of people did. We actually talked about last week on Friday getting long right here at where this circle is. So, you know, we say this a lot. You guys can make good money day trading. You can make a lot better money if you're willing to hold positions a bit longer, right? Because if you think about it, this thing has moved, what is that, 600-700 points from that breakout from Friday. So big moves will happen, especially when you see that consolidation and that breakout and you're going in the trend direction. This is why we trade with the trend, is to catch those runners, because, you know, our thought was when price got above here that we believed that there was a chance price could get to the all-time high, right? Matter of fact, I put a longer term target of 12,575 as the area for opportunity, you know, to kind of look for. And we're continuing to march up that way. Now, we did come to supply yesterday. So we came to that 1 hour supply. We got a little move away. And if you took that 1 hour supply, because we definitely had an entry, if you used a confirmation entry, 1, 2, 3, 4, 5, 6 candles later, price had gone nowhere. So it told you to move your stop to break even or take profits. It was a confirmation entry, and that confirmation entry did trigger, and then it didn't go anywhere, which is okay, because now that just means that it sets up more for bullish moves going forward. Shouldn't have cost you anything on that position. So demand levels down here still remain intact. When I go to the 15-minute chart, Dennis is talking about the fact that the NQ has tighter basing for a breakout. A slightly bit of tighter basing at the moment if you go to a much smaller time frame, for sure. I actually like the NQ if we pull back just a little further into this region here. That would be a nice little pullback on the 15-minute chart. Now, our stop still has to go below here, right? Our stop's still down in this range, but that might be a decent little pullback as an opportunity to get long. That's 12,102 by 12,076. Next, the Russell. So the Russell yesterday, we got the breakout on the Russell as well, but this one, right? So we got the breakout. 1, 2, 3, 4, 5, 6 candles later had gone nowhere. So yesterday, the Russell definitely weaker than our other markets. Didn't have the same picture. So, you know, we talked about the fact that the Russell was kind of the leader for a couple of days. And now that more money's piling into the NASDAQ, we're seeing the Russell kind of slow down that momentum, a little bit of rollover here. I don't know that we're going to come, you know, back down very hard, but I will say that if we get below this area here, I wouldn't be surprised to see us get down to 1603. So if we get below 1626, I wouldn't be surprised to see us get to 1603, because this is all kind of garbage. There's really nothing here that's of any strength in order to stop price from falling. And especially if I get some quality basing here, you might actually have a little breakdown trade. All right. So those are our equity markets for the day. Let me pull up my trade update sheet so I can type that in. Any questions overall on our equity markets? I guess I'll show the Dow here right quick. So when I look at the Dow, yesterday we talked about the breakout that was available in the Dow. So the breakout that was available in the Dow, we did get that move. What's that, at 28,581, and then it moved up higher to our supply level at 28,803. So that supply level at 28,803 was not long lasted. We hit it, moved away, hit it again, moved away. And so if you took the 6 candle rule, then that probably didn't give you a very long opportunity in there. You probably got out of there pretty quickly. And so now what I'm looking at when I look at this NASDAQ or this one, I've got to remove this level here. The origin of the breakout down here is really where our next area of demand is going to be, which would be, oops, wrong drawing tool. That wick over wick's already been touched and we're basing in front of it, would be this area right here. Okay. So that's 28,552 by 28,498. That would be the level that we're looking at for that zone. All right, so let me share this grid. Okay. So let's move over to commodities. Moving to our commodity markets, let's first start the talk about oil. So looking first at crude, yesterday we did get a huge move off of that level on one candlestick. I mean, it was literally one candlestick was the whole day's movement because the market didn't come. We just in the last hour or two got outside of that one candlestick's range. So we didn't get super quality basing in front of that region, although I did talk to some people who took that breakout. You did get a very strong move away on that 1 hourly candlestick for a pretty decent little move, and then it just kind of stalled. So not a whole lot happened after that. Well, when I look at this on the 4 hour, what's my 4 hour trend telling me? I'd like to get you guys' we'll call it your overall opinion and thoughts. Type it in the chat box. What are your opinions and thoughts on the 4 hour trend that we see here? Right? When we look at this 4 hour trend and we identify our last couple of swings, swing high, swing low, swing low, swing high. I've got higher swing highs, lower swing lows. Yeah, I like that. Needs a little bit of coffee, says Lee. Little sideways, little boring, not a whole lot going on. And so when this happens, I am not a huge fan of trying to jump in and pick a directional opportunity. You will see on the hourly chart that there's some stuff down here, but it's not clean enough to lean on. So, there's a gap fill area up here where we could talk about this gap fill area, but I'm just not going to touch it. I just think today is one of those days where there's a lot of other markets and keep it away. The last thing this Gulf needs is another hurricane, Dennis. All right. Next, let's talk about gold. So in gold yesterday, we hit our 15-minute level by literally to the tick, right? So if you were able to grab that, price kind of gave you an opportunity to get in, and we got a pretty strong move away from that level. Now, that once again depends on kind of where you are because that hit in the overnight Globex hours. And so you may or may not have been in front of that market to be able to take advantage of that trade depending on what your time of the day is. But we did definitely get a pretty strong move off of that level. So I need to remove that level and look to the level below is really our next zone. So that level below is the 15-minute zone. That's a super clean area, 1903 by 1901, really nice level in there. When I go to the 15-minute charts of demand, I don't, looking at this demand below me. So when we identify these fair price value areas of demand, I look at current price. I look down and to the left. Well, that's an okay move, but nothing for me to jump up and down about because of the sideways action in front of it. This move is at not a great time of the day, and it's a bit of a reaction to this area over here. And then this is a bit of a reaction to this area here, and it's not super powerful, right? My point is that the demand below me is not overly convincing to tell me that I want to take a long coming out of here. I actually still like the shorts better than the longs. Our 4-hour trend is up, but it's definitely showing some weakness, right? Showing a bit of weakness. And so I think there's a chance that we continue to fall a little bit more. However, I don't have a great trade to take advantage of it, right? I don't have a phenomenal trade to really jump in and take advantage of it. And so, you know, I don't really see too much of that slowing momentum in the indicator, but it looks to be rolling over and a move down. So until I get some sort of basing that allows me to take a breakdown on the short, I'm not going to try to jump in on anything here, either short or long, until I come to one of these more quality levels. Now, obviously, if I come up to this basing area here and we get a pop out, great trade. You might look here for a breakout if you want to be a bit more aggressive in front of that and get long above this 1930 area up here. If you want to be a bit more aggressive for a day trade, if we get basing. All right, next. So nat gas. I thought we might have an opportunity at the gap and go. It was not. It was a gap and crap, as it looks like it's to be fading the gap and coming close to our gap fill area. So I'm going to remove the lines here for this potential for the gap and go, because that was a good setup for the gap and go. It gapped up in the direction of our trend, but we never got in, right? There was no reason to get filled on that position. Now, playing the fading of the gap, if you faded the gap and got low, kind of below that candlestick's low, then you've gotten a decent little move out of that position. In reality, you've got two levels of demand down here to pay attention to if we're going to rejoin this bigger picture uptrend, right? And those two levels of demand, one is the gap fill, the other is this area down here. Now, my problem with the gap fill is this basing we've gotten right in front of it. We came close to it and moved away, so the gap fill at this point has to be a confirmation entry at best. I said yesterday or a couple of days ago that I like the demand area below the gap fill better than the gap fill itself. All right. Copper, we're still in between our areas of supply and our potential breakout area up above. Technically, this level would have been okay for an overnight trade, but it's already been kind of tested once, so I'm not going to go back in with it. And so I'm going to leave that area of demand in place. When I look at soy, so soy here was our confirmation long. And we switched it to a confirmation because we almost got filled and didn't. And look at what that confirmation long did for us. Kept us out of the trade, right? Keep us out of a trade. Remember, confirmation trades aren't always to get you in. They're to keep you out of the ones that aren't going to work. And that's the way I like to use those. Little bit of a bear pennant pattern forming here. Typically, that breaks out to the downside, and it's half the length of the pole. And so if we get that breakout to the downside, which is half the length of the pole, that'd bring us, about, call that half the length. That would bring us down around this region here, which is a little line of support that we've had in the past. I don't take the trade on the breakout of the pattern, however. I would be more likely to take the trade on the breakout following our breakdown rules, which would be 3 touches and basing in front of a level. So in that case, if you think you want to take the breakout, then I'm going to need this area here to be my breakout point, and I would need basing in front of that zone. As far as the demand below me, I'm going to get rid of that demand below me, only because we're basing in front of it, and it was a lot of sideways price action in front of that zone. Corn, similar demand area that we came close to, so we switched to a confirmation. Came close to it again yesterday. We were unable to get in. So, like the soy level, I'm going to remove that area. I think there's a chance we could, maybe seeing a little bit of a rollover here. it's not quite a head and shoulders pattern, but it definitely has the looks of something that may be. And I wouldn't be surprised to see us pull back into this region. Back here, 380. All right. Questions on commodities. You guys are awful quiet today in the chat box, so I want to make sure you guys can still hear me and you're still there and listening. All right. I'm glad you're here, Liz. Makes me feel good. Tom's there. All right, we're good. All right, moving over to bonds and currencies. Last couple of minutes we got left on the clock. I'm going to start with the New Zealand dollar, which we've been looking at lately. Jose I don't know if Jose, are you in here today or not? I got your email, my friend. I'll shoot you an email back, by the way, on that. All right. So looking at the 6N, which is the New Zealand dollar, we have a 4-hour trend that's a little lackluster, I guess we would say. It's up technically, but it's a little bit lackluster nonetheless. And so going to the 1 hour, bit of a reversal area here before these big candles. We came close to it, unable to get in, and price moved away. By the rules, it's kind of borderline between whether that's close enough to turn it into a confirmation entry or not. When I think it's close enough, I turn it into one. And so I'd rather turn it into a confirmation entry than not, because I'd rather be safe than sorry. All right? I mean, that's always my when it comes down to it, my goal in life is to, as a trader, my job is not to go out there and find ways to make money. It's to try to save and preserve my capital and look for the best probability opportunities. And that's why switching to confirmation entries and utilizing 6 candle rules and things like that is so pivotal, because my job is to be a professional risk manager more than it is to time the markets and identify trade opportunities. Yes, those are great. You can't do anything without those. But if I don't manage risk, eventually I'll have no risk to manage because I'm going to run out of money. So look for a potential breakout above this 66.77 area. That's kind of a fair price value zone where we've pivoted around in the past. It's not a super clean breakout as of yet, but if you get quality basing, I think you get a decent breakout in here. Yeah, Paul, we've got a I'm very big. So his question on explain the line very quickly. A dashed line is confirmation. A solid line is a limit entry. A green line is 60-minute. A purple line is 15-minute, and then a blue line is a breakout. So if you go to the website and you go to the free under on-demand free trading videos, so go to my website tradersarmy.com, go to free trading videos. There is a course just on how we draw the lines. Oh, not logged in. There's a course in there called Drawing the Lines on the Charts. So just go watch that. It's about 8 minutes long, and it'll explain what lines we use and why we use them. All right. Next, the Australian dollar. So we had a pretty good day yesterday, and then the Aussie came by, and kapowie came screaming back down. So the Australian dollar, we had a really nice area of demand here. But what's the kryptonite for this area of demand? What was the true kryptonite for that demand area? And why it gave us why it probably gave us that failure point? Yeah, right here, just before the level, we had this basing. So if you think about it, this demand right here means that our risk was at the tightest our risk could be, it's this much. Well, that means that we had a 1-to-1 profit margin on the trade if you wanted to get in on this position. So basing, kiss of death before the level, which is why I don't do set it and forget it trades. And once again, it is sexy. to talk about set it and forget it trades. It's sexy for people to say, just set your trades up, let your zones work. I disagree with that. I'm sorry, and I'd love to tell you guys that this game's going to be easy, but it's not. You got to be willing to look at your computer, and that's why I utilize not just my computer, but also my mobile device and alerts. So by having alerts set up on my computer that will trigger to my phone, I can execute on my phone if I know the level's good, but at least I can see, are we getting basing in front of the level? Now, look at the secondary level that we had here. Halfway into the zone. Now, price came into the level halfway into the zone. We got a little touch off of that zone, so you may or may not have gotten filled depending on your time zone and where you are if you were looking at that market, but this gave you a confirmation entry, and price has moved up. Now, look at this. Price moved up just about to our opposing level, right? Yeah, Liz, that's right. They turn into set and regret very easily. So we've gotten a decent move away. If you took that long, I would say that now's a great time to take profit, especially since we got this reversal candlestick right here. That reversal candlestick to me is an important one because that's a really strong reversal pattern after what would be considered, a strong bullish candlestick. So we get this strong bullish candlestick, and then immediately we get this high wave kind of reversal candle to tell me that I think the better probability is that price continues down. Now, on a 4-hour chart, my trend is still up, but I wouldn't be surprised to see us come down a little bit and stall just a smidge. So I'm not, once again, another market that I'm not going to add anything to today until we get a more definitive direction. And the weakness that we see in this hourly chart kind of scares me a bit to look at any longs until I get down to this region here. The euro, so our euro level yesterday, we had our gap down on the euro position from Sunday night. We continued to trade down, rallied back up. So we're seeing some weakness overall in the currencies. The euro came close to our 15-minute level without us getting filled. So if you want to continue to trade that level, it's got to be a confirmation entry. That's our rules on that, but that trade style. But we're basing in front of the level. So in reality, I think it's probably better just to remove that zone. And when you remove that zone, frees you up to take a look and say, all right, well, where's a good opportunity for a short? If we get a pop-up to here, you got a little short opportunity, although it's a terrible time of day. I know someone's going to type in about the time of day. It's a terrible time of day. Just going to stress that. But you could have a decent little reversal off of that because of that speed candle, and it's a very small level. The other thing I might say is look to see if we get basing somewhere down here for a potential breakdown, but it's just not there as of yet. So once again, I'm not trying to force trades. I want to make them come to me. Canadian dollar. So we looked at the Canadian dollar yesterday. We did get quality basing. We did pop above that level, and we popped above that level later in the morning right after the DMC. Decent basing, pop above. 1, 2, 3, 4, 5, 6 candles later, what did the market tell us to do? The market told us, not interested. Don't waste your money here. Get out with a small profit. That's what the market told us. Now, if you stayed in, your stop was probably down here. If you stayed in, you get stopped out. And then the darn thing starts to go our way. Now, can we still get back in on a breakout? Sure we can. If you think it's still going to run up, get back in. Just get back in. Just put your stop down below here if you still think it's going to run up, if you've got a strong bullish opinion on what this thing's going to do. When I look at this on the 4-hour, my 4-hour tells me, yeah, it's probably going to continue to run back up. It was close, Liz. It was one of those ones that when we were talking about it yesterday, it was this area right in. Let me just do this. There we go. So it was right in here. It's borderline. If you're willing to take the risk, then it was close enough. If you're not, then that's okay because it wasn't a picture perfect great breakout trade to begin with. But if you took it, it then told you probably shouldn't be in it much longer. So it shouldn't have cost you anything on that setup. I think that's the point that I'm trying to make is that it doesn't have to always look that way. All right. Next, Great British Pound. We have our demand level down below, which I still think is a good area, and it looks like we have a better chance of getting down there soon with this rollover style that we're seeing as a setup. Our 4-hour is still up, and so this would be a pretty good pullback into that region, although our 4-hour, anytime I see this many basing candles after a strong move up, that's oftentimes, take a look at this area we had in here, right? It typically leads to a bigger move down. So, yeah, Liz, and not taking it is okay because like I said, it wasn't a picture-perfect breakout. None of these currencies are very pretty today. None of these currencies are very pretty today. Matter of fact, when I look at these currencies, there's really not a lot of great currency opportunities when you're trading these currency futures. Now, when you start looking at the currency cross pairs, right? So maybe you say, hey, I want to try to take a look at the euro yen. And I look at the euro yen and say, you know what? This sets up for a pretty decent breakout above here. And if we get the breakout above there, now I've got a pretty decent reversal right here, right? If I take a look at the New Zealand dollar, Aussie dollar, Aussie New Zealand, sorry. I always do that one backwards, right? Looking at this, if I go to the 4-hour, one candle screws us all up. Go to the 4-hour chart, I got a pretty strong downward trend. We've got a little bit of a reversal candlestick here. If price comes back up, this is a really nice reversal point up in here. A beautiful trade with a really nice setup. So I don't normally look at currency cross pairs because I normally stick to the futures market. But if you trade currencies and you normally trade currency futures and you're not getting a lot in currency futures, but you want to look for other opportunities, there are a number of different other trades out there that you can do when you utilize currency cross pairs. That might be, kind of a slightly better opportunity, a slightly better setup. So just something to think about when you're looking at opportunities for today. Well, Trent, that's a great question. If you trade a minor currency like the Aussie New Zealand, do I also need to look at the New Zealand US dollar if my account is in US dollars? I think that's going a little bit over. I think that's unnecessary to do, Trent. I think that's one layer of analysis that's going to be kind of unnecessary. If the trade works in your favor, great. Now, you may not make as much because your currency carryover may not be as pretty. But I think it's still going to be okay because if the trade works in your favor, it's going to work in your favor. It's just really going to depend on how much it works based on that conversion back into the US dollar. Does that make sense? If you see a great trade and it's a great setup, take the trade in the great setup. And then the currency conversion, you're still going to make money. It's just going to change the amount you'll make based upon that conversion for that to back into, what's the word, repatriate those dollars. So, all right, everybody. Well, that's all I have for today. Let me share this grid as well. All right. So, real quick reminder that we have our Trader Summit on Thursday morning. So you don't want to miss our Thursday morning Trader Summit. For those of you that are brand new to the channel, do me a favor, if you would, real quick, hit that little thumbs up icon. Means a lot. There's still 50 of you on there that are watching live. The more you could do that, the better. If you guys would, if you're watching this on recording, leave a comment down below. I'd love to hear, you guys' experience in trading with the daily market commentary. Is it something that you have found helpful? Is there something you'd like to see me cover that I don't cover now? I know we've expanded to a 30-minute show basically every day from our normal 8 to 12-minute video, but hopefully you guys are still getting a lot out of the position. So, all right, everybody, hope you guys have a great day. I will see you soon.